the key takeaways for you from that conference call on Access Bank?
Specifically for Access Bank, as you said, their focus is going to be on execution. From what they've said to analysts, the idea is to just try and bring down costs as best possible and execute on the merger. To a large extent, the sense we get is that they've started to integrate the businesses. But once again, the focus is just going to be on how they can sort of control the costs. We were talking about Access Bank costs. In Q4, we had about 36 billion in overall costs, personnel costs and costs related to the business at different levels.
And that's obviously a big issue now that they have well over 10,000 employees.
Yes, and it appears that going forward they're going to be looking to do something about that cost. About 25 billion of that cost is still Intercontinental Bank related, so they're going to be looking to trim that somewhat even as they move forward. So that's going to be really where we're going to keep our eye on is a cost line for Access Bank.
Overall, is ARM positive on Access?
Well, we're positive on Access to the extent that they can execute this merger. We think it offers significant opportunities for the business as a whole, but really our concern is just that over the next little while, there are some issues in terms of the balance sheet and the exposure to AMCON and the ability to move around that balance sheet and take advantage of some of the opportunities we see. Even on yesterday's call, the focus seemed not to be so much on growing the business per se, but just really focusing on cost. So those are the things we're going to be watching. On balance, we think it's a good deal, but it's really a matter of execution.
The focus on cost is clearly an industry issue now.
Yeah.
But anyway, let's move on and talk about the impact of MPC on the fixed income market. We've had 2 days to sink that in. Yeah. We had the Treasury bill auction yesterday. Yes. What's the sense right now that you're getting from how the market is reacting to that decision to keep rates on hold?
Well, the impact has been largely positive. Yesterday we had a T-bill auction where we took in about, what was offered was about 100 billion as opposed to about 80 billion, which was maturing. Indicative rates came in at about 14.3% for the 91-day and about 15% for the 182-day. That's about a 50% basis points drop from the previous day. We also saw significant activity in the bond market, particularly in the 10-year space. Yields also dropping there. So
yields going down in line with the drop in inflation. Yeah, but it's really more a function of liquidity, isn't it?
Oh yes, it is. There's a large extent it is. There's significant liquidity in the system, but we expect that going forward, some of this activity might pipe down. It's just, I think, a lot of market players are taking positions around that decision.
And for the equity markets, what's your sense of the impact? I mean, it's great news to see that rates are not going up anymore. Yes. Yeah. But overall, do you think this is positive for looking at it from the company's perspective, and of course, just the perception of equities in the light of asset classes that investors are looking at in Nigeria?
I think a lot of the comments that came out of the MPC minutes just sort of suggest that the central bank is getting a little more comfortable with what's going on generally, especially from the fiscal end and how inflation seems to be well in control. They did note that there were some still headwinds in terms of the currency, but on balance, the outlook is just that we're likely to get a continued downward trend in rates, and they might even get a cut.
The peak of that
tightening cycle. Yeah, so that's obviously positive for equities because it just means that it's going to be a more compelling asset class relative to fixed income.
Right. And let's talk briefly on going back to the MPC and the WDAS auction for FX and, of course, the foreign reserves, how those things played in the minds of the MPC, the Monetary Policy Committee, as they took their decisions. What are your thoughts on the demand we're seeing on the WDAS and, of course, how the FX reserves are playing out today?
That's an interesting question, actually, because we're just looking at what's going on in WDAS. And yesterday, once again, you saw the central bank sell $200 million.
They've upped that from about 150. They used to do about 150 a few weeks ago.
But it's been remained relatively stable. And given the sort of stability we've seen in reserves, and given the context of increased crude oil production and higher prices, we're kind of wondering what was going on in terms of WDAS. But just looking at what the central bank did in terms of reserve use, we saw that reserve use on a week-on-week basis has gone up from about an average of 1.2 billion over the last 2 months to about 4 billion on a bi-weekly basis at the end of on February. So it just gives us some concern that a bit of reserve use might be going on, but we're not seeing it in the WDAS.
I think the issue of reserves has been a bit of a touchy subject. I think given where oil prices are, given what oil production is right now, I think there's a sense that we should have much higher levels.
Oh yes, we actually expected much more significant growth. I mean, if you just look at where the production was in terms relative to price in January and February, we saw about 2.4% growth in January, about 3% growth in February, but we've just seen it stagnate ever since the third week about thereabout in February. I'm just kind of wondering why. But if you look at the numbers and the breakdown which the CBN has given, it's not coming from WDAS, it's not coming from remittances, but it's coming from other uses like letters of credit. So it would appear that, you know, maybe some of those petroleum marketers have started coming back into the fray and demanding more of that, more of the dollars, and we're seeing that show up in dollar use, even though it's not showing up on WDAS.
All right, Mandela, final point from you as we come back to the equity market. What are your broad expectations? We've seen a pretty mixed picture in terms of bank earnings season so far. I think the clear bright spot is GTB's numbers.
Yes.
I think everybody else is a bit concerned about what we've seen for the most part, although we haven't seen that many. But your thoughts on how things are playing out and if we would see that rally in the second quarter?
Yeah. It's really anybody's guess what we're going to see. We expected the financials to be sort of the driver of this market, and thus far, you know, we've just had mixed results. We're looking forward to First Bank to get a better sense of what's really going on in that space. But on balance, we're positive for the market for the full year.